Hey, quants, the market is not looking great today. So after a short-term pullback yesterday, it looks like we are seeing some continuation of the downward momentum. It seems like at some point this bleeding would stop, but apparently we are not ready for that yet. So if we're looking at the master strategy here, this convincingly turned bearish on the 16th, and we've just continued that, even though we saw a little short-term pause yesterday. It looks like people still hate BTC and want to just throw it in the trash. So that's what we're seeing today. There are a few signs of I don't know why I'm just stumbling there. So we're seeing some signs on a 4-hour, which is not something I normally do, but I normally just like to stay at the daily time frame or the weekly time frame when I'm doing my own analysis. However, with the downward momentum being as significant as it has been, and I'm going to go into that a little bit later here and show some different statistics on that. I am looking for when we might see some upward momentum or just a short, even if it's just for the short term, right? So same with the market going up forever. That can't always happen. Same thing is true with down. It's not always going to go down, right? Eventually we're going to see some upwards price action, even if it's only for the short term. And as always, well, I'd say as always, it's never going to be as much as everybody wants. So even if we went all the way back to all-time highs, people would probably still want more. So let's take a real quick look on the 4-hour time frame to look at what I was talking about. So right here, we'll see there's some bullish divergence that already printed, and now we're looking, and I'm looking at the MACD over here. There's potential for 3 drives of bullish divergence here. We had some bullish divergence here, and with this pointing down, if this does turn around, it looks like there would be another drive of bullish divergence there. So having 3 drives of bullish divergence would be a good spot for us to see some short-term, if nothing else, positive price action. So I am expecting that to happen at some point here in the future, even if it's only for the short term. So there was one other thing that I wanted to mention about that, I think, but I will come back to that if I can remember. So I haven't shown, let's see, I didn't do a video yesterday, so I didn't show the weekly strategy. So the weekly strategy closed yesterday. I'm going to kick down to the 1 hour so that I can just take a quick peek at that. I think it's this one here. Yep. So I just want to turn that on. And usually I set this up beforehand, but I was actually looking at other things that I think will be a little bit more interesting, just kind of saving that for the end of the video. So last entry was a loss. So that's just the way it is. This strategy is not a great strategy to trade. And one thing I would mention, while this weekly strategy doesn't take that into context, I did not do any serious review of this strategy. It just was something I was postulating. I threw it up here. Maybe I'll stop looking at this. But the point that I wanted to make is in the bull market, it looked like this was kind of playing out where if you just bought on Sunday and then sold around midnight on Monday, then you would be oftentimes winning. And so I put that in. It, ultimately was positive, but let's see, this is only going back to 2023, which is kind of what I was speculating. So the whole point about the reason I'm mentioning that now is if we see this strategy just totally tank, then that would not be something I would necessarily not expect to happen, because with the 200s being bearish postured and the 821s being bearish postured, what I would expect in this case is people to be doing mean reversion plays back to the 200s or taking those short-term scalps and then just taking their smaller profit and walking away, essentially people unwinding their positions for the macro trend trades, taking the 4-year cycle into context. So let's go to the other stuff that I think will be a little bit more interesting And that is, I'm going to go ahead and make the screen a little bigger here, hide those oscillators over on the right there. And I want to look at the cycle pullbacks that we've had. So in the context of, let me reset the chart, well, because I'm on the 1 hour time frame here. So I wanted to take a look at all the pullbacks that we had so considering that we may be in a 4-year cycle, and that looks like it might still be playing out. And so I just want to take a peek and see, hey, how did the downtrends play out, and where are we at in that context? And so these small ones, I went ahead and put them in there, although obviously they're not near as big as some of these other ones. As the numbers got bigger, the percentages stayed relatively the same, even though the numbers got larger. The other thing that I put on here is I put the angle. And the reason I put the angle on there is because I wanted to see how extreme these downward movements were compared to each other, so relative to each other. And so let me go ahead and hide that as well. So I'll just go over the first ones here. So first ones, and one thing I want to note when this tool here that I'm using is just the drawing tool. And if you put the angle on here, it will measure the angle, but that angle is not going to be fixed. As I change the chart, you'll notice that these percentages change. And so having said that, I think what might be better here is I'm going to reset the chart, and then I'm just going to drag it sideways, and then that way we're not seeing the angle change here. I'll zoom back out just to see the whole picture again, but just so we have a relative estimate as we're looking at these, you can do this zoomed out and see the relative angle to each other, or you can zoom in like this just to make the numbers easier while I'm going through each number here. I'll just zoom out for the time being. So first one, 22 days, we had an angle of 59%, negative 59%. That was a 22% drop. I also put the dollar amount in there, but I'm not going to call those all out. The next one we saw was a 62 days, 20% drop, and it was a 33% angle. So this one was not as extreme. It took a little bit longer. The next one was, again, 21% drop, 59 days, 36% angle, and so not as extreme as that first one. Both of those kind of like just taking their time to meander down to a low here. So this one was quite extreme, and I think this one is actually the most extreme that we saw, but it was also the fastest, right? So this one occurred on January 10th of 2024, and this was a 67%, a negative 67% percent, or degree, I don't know why I'm saying percent, negative 67 degrees was the angle, and then it was a 21% drop. So we saw a lot of 20-ish% drops there, and so now the numbers start getting quite a bit bigger. And so this one was the drop in March 13th of 2024, and so a 38-degree drop with a 32% decline, price decline. And so it looks like it's still adjusting those angles. Well, that's not working the way that I had hoped. 67, 60, yeah. So I might have to zoom out here, but we'll just take this as it is since I've already started that. So next one was, I don't know if I could have put the dates on there. That might have been a little easier to read, but January 19th, 2025, 31% drop with a negative 55-degree angle. And then the final one here was that we're currently in right now is a 29% drop. And actually, I probably have to take this a little bit lower because the price is still going down. So 29% drop, and it is a 73-degree downward angle. And so let me go ahead and zoom back out, because what I wanted to kind of highlight here is now we can see them all. We've seen the numbers, although the angles will have changed just because of what I mentioned. So if I go back, this was the most extreme. We set an 80-degree downward angle, and this is 80 degrees 0.75. We are at that same extreme decline, and so that's why I really wanted to call out these angles here. Is these are, in terms of just straight up dumping, we are at the most extreme that we've been, with the exception of the one that occurred back on January 10th of 2024. Both of these are really in the same realm. And so this has actually declined even more in terms of percent. So we're 29% down, $37,000 down from the high. That is pretty painful, I would say. This one was only $10,000 down from the high, which again at the time was still fairly significant because we were talking about a price decline from $50,000. And so I've already called out the percentages. So relatively similar in terms of percent. This one's a little bit more. Of course, it's actually getting quite close. It's actually getting much closer to these bigger ones, I should say, right? But it occurred a lot faster. And so something else to note is notice how as we went over here, these declines just got stronger and stronger. And what I meant by that is they're faster. If you look at these angles here, they happened a lot faster, right? So slow, fast, very fast. And so all that to say, people lost money quickly. This one has been going on for 43 days. This one here only lasted 12 days. So considering the percent drop is closer to these, this one lasted 77 days. This one lasted 144 days. So there's not much for me to say here other than what I was showing on the 4 hour. There's a potential for bullish for a short-term reversal. These extremes can only happen for so long before there's going to be some capitulation either direction, and we'll see some price action the other direction. And so I'm still ultimately expecting some of this pain to go away to see some short-term reversal. What I would like to see is, not that the market cares what I want, but what I would like to see is for the price to go back up to the 200s, and then that would be the real decision point. It didn't quite get the touch there. If it never gets back there, then we're going to look back and say, well, this was it. That's all you got. So this is the best shot you had at unloading your bags below the 200s. So I would still like to see a retest there. And if we don't see a retest here shortly, then what I would expect is the 200s to continue to come down, and eventually we're going to get back to the 200s. The question is it way down here? Is it way down at 80,000 or 70,000 or 60,000? Who knows? But the point is, over a course of time, the 200s will come down, and eventually we'll get that mean reversion play. It might not be a play worth playing, depending on time in that context. So that was the 2025 cycle pullbacks. And then the next thing I wanted to pull out here was the potential Elliot Wave count. And I'm not going back and creating the Elliot Wave counts. I'm going to apply some very basic Elliot Wave concepts here. So I studied Elliot Wave quite a while in the past, quite a lot. It's real easy in hindsight to pick out Elliot Wave. It's very difficult to apply Elliot Wave in the future, and so it's not something that I always tend to use. But the reason I'm looking at it right now is because I would like to consider one of the rules of Elliot Wave, which is that the third wave cannot be the shortest wave. And so I just wanted to take a look at these and see what we have here in terms of being the longest or the shortest. And so we have this, make sure I got my settings right. So we have the third wave drawn here from it. So if this is going to be the top, and this is kind of what I would look at as the Elliott count. So we got one, and we have one with a decline, two, three with an incline, two with a decline, and then five at the top here. And the reason I do like the look of this from an Elliott Wave perspective is because we have the rule of alternation being applied here. So this one was longer, and it was a little bit choppy. And then the up here where we would have our 4 count, this one was really V wave. And so that would align with the rules of alternation. So just very simplistic view here. And so now what I would do is I would take the third wave here, and since this can't be the shortest wave, we would expect, and just looking here, I can tell already wave 1 would be longer than that. And so what I would want to confirm is this actually shorter than the 5th wave that I've already drawn? And I don't think it is, but if I just kind of move it up here, it covers both ends. And so you know, the unfortunate side of that is that it's not the shortest wave. And it also doesn't align with the idea that Bitcoin is becoming a commodity. And in commodities, if you're using Elliot Wave, you would expect the fifth wave to go longer or to extend farther than the third wave, even though oftentimes, again, it's not a guarantee, but oftentimes the third wave is the extended wave if you're playing in equities. And so a lot of people will get that mixed up with not only does the third wave, meaning that the third wave has to be the longest, which isn't actually true. It just cannot be the shortest. And so if we apply that rule that, and then if we take the idea that if you're not using, well, not the idea, but the, I don't know if it's actually a rule or just a nuance to the Elliott wave theory here, but the point is that in commodities, the fifth wave is typically the extended wave and not the third wave. And so, but it still is true that the third wave couldn't be the longest. So if the third wave, the third wave can't be the shortest. So if the third wave can't be the shortest and Bitcoin was a commodity, then we would expect the fifth wave to be much longer. But there is a bit of a problem if we were going to do that, because wave 1 here would already be longer than wave 3. And so since wave 3 cannot be the shortest, wave 5 has to be shorter than wave 3, which this is just all arguing that, oh no, this is the top, right? Now, what would invalidate this? Well, one thing that could invalidate this is this just is like an invalid Elliott wave count. Again, I didn't break down the individual waves here and try to apply all that, right, to get a really deep Elliott wave analysis. So cursory overview, if I were looking at this and if this Elliott wave is correct, taking the idea that the third wave cannot be the shortest, then I mean, the game is over, basically. That's it. So this is pretty convincing here. 4-year cycle, it's over. We have the, master strategy says it's over. That's not really what I want it to be, but, market doesn't do what I always want it to do. So there you go for that one. What else did I want to talk about here? So the Elliott wave, that's the end of that. The next thing that I wanted to just go over briefly is I did create that DCA strategy. I made a video about that, so you can go back and check out that video if you want to see how to build an indicator. I don't remember if I built this indicator. I think I went into detail about this indicator. I published the indicator, and then I just kind of provided some different detail on this. So this indicator has proven to do pretty well in terms of actually making money. And but one thing that we didn't really analyze on the video when I was talking about, because I don't know where we're probably in October at some point. I don't think some of these sells had occurred. Both of these trades were still, the two recent entries were open, and so one of the recent entries were open anyways. And so point about that is that we were not seeing, if we're just looking at this, we don't see the decline in price. And so I want to look at the list of trades here and just note that both of these positions are down, but we did have a buy when we had declined 10% from the top, and then we did buy again when we declined 20% from the top on this current monthly candle. And so both of these are underwater positions, but these are DCA positions. And the whole point of these is that you're going to hold them long term. So we've hit a 10% buy target, decline buy target. We've hit a 20% decline buy target, which of course we already know because we looked at the daily and weekly chart, and we've seen that currently we're at a 29% decline. So of course we've hit both those targets. These positions obviously are going to continue to stay red until we end up seeing another all-time high or something like that. So who knows if that's ever going to happen. Obviously, we all hope it's going to happen again. And in the context of how stocks historically always go up over time, I expect that would be true, that in the future at some point we're going to see an all-time high again. But my point about that is if you're using something like this, you can use this to just start buying into long-term positions that would be multi-year positions on a decline. You're kind of, right now you're kind of buying the falling knife, but that is what this strategy is designed to do, is essentially when we drop at certain thresholds, the 10% increments, then we're going to be entering our positions. And so if we don't see the market decline more than 50%, you could be down upwards of 40% on a particular position before price turns around. So just wanted to cover that one as well. All right, that's going to be it for that one. I hope everyone is having a good day and not feeling too much pain from the markets today. And peace out, quants.